Hey guys, it's JP Invests, and today we are looking at a beautiful market where we are up 5.14% currently, with a high of up 6.25%. This is not the first time we've seen this portfolio up like this. Last week we saw it up about 8%, but then we had a pretty good sell-off. Maybe it was about 2 weeks ago. You can see it popping a lot from this low, and then it dropped down just a bit, and now we're popping up, and we're actually higher than what we were a bit ago. On the year to date, we are up 25.84%. And today we're just going to be kind of going over some of my big winners and kind of why I picked my investments, and kind of just showing you guys my portfolio and maybe give you guys some ideas for good investments. So looking at my options, these are more risky starters, so we're not going to start with the options. We'll do those at the end for anybody that would like to see a way to make money on either shares you own, or a way to make a little bit more money on things you do want to buy, and you get to pick the price that you want to buy them at, and then you get a little bit of premium for waiting. And also you can get some long calls if you're really bullish on certain stocks. So with my cryptocurrencies, I have Ethereum and Bitcoin. My Ethereum, I don't have that much. It's only 0.19. It's about, I think, $200 to $300. I'm not exactly sure. I just tossed that in there recently, so I'm about break even on that. The Bitcoin I bought at $26,000, so I put in $300, so I'm up about 30% on that. So up about $100 on that. So that's been pretty well. My plans are to hold the Bitcoin until hopefully I could see the Bitcoin going up in the next year or two to around like $70,000 to $80,000. So I'm going to be trying to sell. That's my sell range. And if it doesn't hit it in this near term, we'll just keep holding it since I have that such a low average cost. And Ethereum hopefully runs up about $6,000 to $7,000 if that happens. And I can make a different video focusing on why I'm bullish on Bitcoin because there's some stuff happening in the background kind of that makes me bullish. Okay, starting with Amazon, it is one of my rather large holdings, and we own 8.5 shares, and we're up about 39.5%. With Amazon, it's just an overall good company that they have a lot of faucets for profitability that they just need to turn on the spigot and it'll just be flowing a ton of money. Like, they're not even making any money off their actual true Amazon retailers. Where they make a lot of their money is AWS, and I think they have a great possibility to benefit a lot from this AI revolution with hosting a lot of these AI bots and softwares on their servers, and they kind of just take a transaction fee off that. They're currently at $146 per share, and back here at their all-time high, they're looking about $185. I got them at a pretty good price at $104.83 just this last year. I wasn't able to get them down to that $86, but got them pretty early. So looking at a pretty good investment on that. And I'm looking to hold that one for a very long term. I just don't see many other things that are going to outpace something like that. You guys have seen this stock before. It's Alexander Real Estate Group. That is a REIT. And it's a big day for Alexander Real Estate Group. Up 10% just because of the lower CPI and the 10-year mortgage. So a little bit of why the market's down so much, or up so much, is CPI came in at 3.2%. Okay. Last month it was at 3.7. That's a decrease of 0.5. And the big difference, or the big thing that to note, is energy actually came down quite a bit. It came down, I think, 2.5%, but that was completely negated by an increase in housing. So hopefully when housing starts to level out and not increase as much, this decrease in energy is going to be crazy. And if next month we can maybe see under 2.9, under the 3 for sure. And looking at the 10-year, as I was talking about in the other videos, something I've been watching pretty closely. This is a 4.45 down today. That's another thing that's going to help push people out of the bond markets into the equity markets. So another stock that you guys have seen is CCI. This one is also up rather greatly today, 5.4%. Not going to talk about that one again. I do have another video touching on that. We have Duke Energy, which is a utility play. It's a little bit of a safety hold. It's just like anchor my portfolio because I do have a rather volatile portfolio. They do offer a 4%, 4.58% dividend. So you get a nice yield, and I am down on this one. I've been averaging down just a little bit, just trying to average my cost. Just buy in every once in a while with like $20, $30. Nothing crazy, but it's just a stable company that I know isn't going anywhere because they provide a lot of energy for multiple states. Another risky play is Fubo TV, which is up 12.8%. My average cost is $1.50. I'm up 91.19%. This is a stock that I think has room to run in the future. They are growing at a rapid rate. They are growing with customers and with their sponsorships and partnerships with the MLB and other sports. Next stock is Google, a classic. I have 9.95 shares, and my average cost is $128, and I'm up 4.8%. Nothing crazy. I just got into Google about a couple weeks ago. I had my shares in Meta, and I took my profits on that. I was up about 30%. I was realizing some losses, so I kind of wanted to offset some stuff. So I just realized my Meta, and I put it into Google because Google is the cheapest, I think, Magnificent 7 by PE. Looking at, this is just a little bond fund I own, just a little $50 hold. This is a like 5% mutual bond, 5% yielding mutual bond ETF, nothing crazy. Then we have Palantir. This is what my biggest holding in my portfolio. It is also my best performing stock I have. I own 269 shares, and that's about 16% of my portfolio. Today it's just up 1.32%. But if we're looking at this 1 week, we are up 9%. We're looking at the 1 month, we're up 18%. 3 months, we're up 31.33%. The 1 year, we are up 242%. I wasn't quite in all the way back here. I was buying down here, but I did average up because I believed in this company. If we looked at some of my buys, I don't think we're going to actually see any. I have a lot of contracts or option contracts that I do trade with Palantir with my shares. Like right here, for example, I sold a contract to sell my 100 shares or 100 shares of my 200 for $26. I think my average cost was $23 to sell at $23. So what that means is I would sell 100 of my shares at $23 on December 8th, but I'm getting paid $23 up front to buy this contract to say I'm going to do this. But the price has to go up $3 more per share. And I know Palantir has been performing well and everything, but I just don't know if they're going to be able to pump up $3 more worth. And if they do, there are a couple strategies that I will be able to use to roll out that contract to wait for the price to pull back to more of a reasonable price. Or I can try to roll up, or I can buy back, or I can just sell these shares and take a little bit of a loss off the top, and I'm still making money because my average cost is $9.71. So it's really just losing potential profits. But if it doesn't hit that price, I get to just keep that $23, and I walk away with my 100 shares also. So it's a good way to make some money if you don't think it's just going to go crazy parabolic. Looking at PayPal. another one that I am very bullish on. PayPal, they are just beaten down on just many levels. They have been crushed from their all-time high of $300, and that is just because their transaction margins are going down just a little bit. They have gotten a new CEO, and he is starting to restructure. He had his first quarter last month, and now he's starting to be able to get all his plans and what he wants to do and get a little bit of a runway going to what he's actually going to do. So next quarter's numbers, that's really going to be the telltale if he's going to be able to run the ship and help the stock. Because it's not really a broken company. It's more of a broken stock where the price, people just keep selling and selling because this used to be a hyper growth company, but it's turning into more of a value company. So I'm thinking it could run back up to like $100 or so in the near future once they turn around that margin. And maybe interest rates do start to turn around so there's more capital for people to move around. My average cost is $63.17, 42 shares. This is a rather large size holding. I am down 10.10% on my shares, and also if we look at my options, I am brutally down on these. This is why you do not do options sometimes. This is why I do not recommend them. I am down $881 on this options. It is that PayPal, this one right here, that is the main herder. This was, I bought when PayPal was up in $75 and it crashed down, and that is just, I'm holding it until the price returns to where I think it should be, up in the $80 to $100, where that price will be way above what I paid for it. So that's PayPal. That's just a long-term hold. And that contracts are very long. Those expire in 12/19/25. So I have a long time to hold those out. SLG is another property or another REIT, and they own the New York properties. As I talked about in my other video, they are having a heck of a day. They are up 17%. And my average cost is $26.43. I own 31 shares, and they pay me about $8.40 per month, and I'm going to start reinvesting that, as I said in one of my other videos, just because I think they pulled back on their price a little bit. They were up in the $40, which I was thinking was getting a little steep for some of the other opportunities in the market, but now they're pulling back. They're in the low 30s, so I think it'd be a good time to start reinvesting those dividends. SoFi, this one is a great potential future growth company just because they are growing their members like crazy. They have very many products, and they're very kind of like a trendy company with the younger generation. They also have SoFi Stadium, which this summer was able to attract very many members because SoFi members are able to enter that stadium through a special entrance, which gives it a little bit of a prestige feeling, which is helping some people want to sign up just for that feature. But also they offer higher interest rates because they don't have all the costs that institutional banks have, like JP Morgan Chase, which has a large building costs and underlying costs that makes or eats up the potential interest for their customers. Kind of a contradictory play to SoFi based off that. It's a regional bank, and it's Truist Financial. They are up 5.96%, and they have been beaten down a ton this year, 30%. And that is because these banks make money is off the spread between interest rates, and currently the spread is just non-existent because they're reversed right now, where they're supposed to borrow short and go long, but they're not able to do that because of this. With interest rates starting to stabilize and the market's reversing and becoming normal, and hopefully interest rates going to be coming down, they're not going to have these losses on their bonds, which are, for Truist, I think it's about $10 billion or so. And they just sold off their insurance business for liquidity, so that should provide them not having to sell off any of their loans or assets. Because the big problem with these loans, or the big fear with regional banks, is that they're going to have to sell their assets at a loss. And if they have to do that, then they're not going to have liquidity they're going to have to sell for liquidity, but if they have to realize this loss, they're not going to have enough money for their members. So if they're able to find money in other ways, like Truist did with selling their insurance business for $10 billion, then they're not going to have to worry about selling anything for a little bit longer. And hopefully that's going to hold them out long enough to where interest rates are a bit lower and they can get this interest margin going and everything like that. While I'm waiting for that type of return, I'm getting a 7% dividend, which is paying $27.57 per quarter now, which is a very good dividend. And I reinvest that, I almost get 3/4 of a share. Tesla, wow, up 5.4%. This is what you like to see. I own 5.2 shares, up 30.69%. I used to own double the amount of shares, and I did sell back in, let's see, I sold at 232. I sold 5 shares. Just because I wanted to spread out my portfolio, I did feel a little concentrated in Tesla, and I'm not sure about their margins going forward, but currently they're chugging right along and they're doing pretty good. And that's a long-term hold for me, just because of the full self-driving and robots potentially. There's a lot of other business models like solar and stuff like that in the business, kind of built in for future growth. I'm not going to go into Vici. We did talk about that. They're also having a pretty good day. We'll go into here real quick, which is a Vanguard tax-exempt ETF, which is just a muni bond ETF. And currently that's up 0.78%, which is a pretty good day for bonds, I would say. Municipal bonds especially. And those are just tax-free if you haven't seen my other videos at the federal level. So they're just a better investment for a not tax-sheltered account. So a little bit of a funny play, or just like a see what happens, a experiment, we'll say. I put $15 or $16 into Yield Max, TSLY. And I put it in when the average cost was $14.55, which I would have thought was a pretty good price based off this year chart. I don't know, the highs are like in the 17s. I kind of thought I would have just averaged in. So I just tossed in a little bit of money. So I have 1.18 shares, currently down 19%. What I'm testing out here is I'm reinvesting the dividend. So currently it's 69 cents. In the last 2 months was 65 and 65. 65 and 65, or 64 and 65, excuse me. And they reinvest each month. So I'm trying to reinvest it to get this total market value above what I invested and build that dividend up to something that's actually great, up to like a couple dollars a month or something like that, where it's actually going to be paying my original capital every couple months. I don't really care about the original $15. If I keep reinvesting it and it say I stop reinvesting it when it's $5 a month, this is a long ways down the line. I don't even know if this ETF is going to stay liquid for that long, just based off of the this track record of being 41% down just this year. Which it does yield a 40% dividend, but if it's going down that much, then you're not making any money. So I'm just kind of a little experiment with that. Lastly, we have Tellurium, which is a very, very speculative play. What this is a natural gas, liquid gas plant where they take liquid natural gas and they put it in this compactor, or they take natural gas and they make it into liquid natural gas for these tankers. And the whole business model behind that is liquid natural gas in the US is about $3 to $4 per unit. And in Europe and overseas, it's currently like $12 to $13. And if they're able to ship it over there and just charge, say, $8, and they're able to make a margin of $4 per unit, then they are making a crazy amount of money. It's just very, very capital intensive to get these places set up. They are set up to have natural gas running and flowing onto tankers by 2026. So this is a bit of a long-term hold, but if you did look at the 1 year, this might be an opportune moment to hop in just because of the weird markets. They have had a super bad time in the markets. They have been just destroyed. I don't know how much more they have to go down. I currently have 305 shares at 61 cents. And I don't know if I'm going to be putting much more in. If it does crash to something lower, I might toss in a little bit more. But I'm not going to be going crazy much more. I don't want to risk very much on this. This is kind of just a speculative long-term play. Because if they do just turn it around and it's a $5, $10, $15 stock, this would be a great investment and be a crazy return. And it's just really, this amount of money is not a large risk to my portfolio. So this has been my portfolio, and I kind of just like each stock kind of walking you through. If you guys have any recommendations for stocks that I should look at, or kind of have any questions for me, I've done pretty well. I'm up 25.7% this year. In all time, we're up 38.68%. And I've only been investing for 2 to 3 years now in the stock market. I mean, that's as long as I've been able to. I didn't do a custodial account when I was younger, but I really enjoy making these videos. So hopefully you guys have some recommendations for types of videos, have questions. I can pretty much try to analyze anything for you guys to the best of my knowledge, try to find news and stuff like that, keep on top of it. But the big thing to watch right now is the 10-year. And core CPI, and you know, it just keeps going down. We did have a little scare when it was popping back up into that 3.7 last month, but it's starting to go back down. And with energy decreasing so much, hopefully housing's going to level off, and we're going to be down. And we're still coming down off these crazy highs from a couple weeks ago with the 10-year, which is also going to help push up the market. So hopefully we're going to be pushing into the Santa Claus rally that everyone's been talking about, hopefully. So I'm going to leave you off with the count over $24,000. And we're hoping we can get back up to this all-time high of 27,689. We're hoping we can get back up there maybe by Christmas time. That'd be a nice little Christmas gift for us. Thanks for watching. This has been JP Invests, and make sure to subscribe and like, and make sure to comment if you guys have any ideas or questions. Thank you. Have a good day.